Today we saw a very bullish recovery off of the intraday lows, closing higher for the day and continuing to push higher with bullish momentum. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So over the weekend, we looked at the weekly charts and the weekly technicals, and I talked about a lot of the reason why we were going to have a bullish week ahead, because we do have a lot of positive momentum in the technicals telling us that we're likely to continue climbing higher. Along with that video, a lot of you told me you did not prefer the white background charts, so I did make that change after seeing the majority of you do prefer the dark background charts. So just very quickly, I'm switching this back over to the Trend Spider daily chart of SPY, and this is now what it's going to be looking like. So do let me know if you like this current look, which is the Trend Spider chart of the daily SPY. Alright, so today we did bounce off of that critical support on SPY, which is down here at 407, and we did get a bullish engulfing candle even though things were looking pretty grim on the gap down open. We held that support yet again, and the price action is still closing above all the moving averages, including the positively sloping 5 EMA, which means we could see SPY pushing back up towards 411 and then 414. Now, one thing I want you to pay attention to is that the positively sloping 20 daily moving average is getting very close to crossing back above the positively sloping 50 EMA, and the last time we saw that happen was back in that very impulsive January rally off of the lows. And then we did get a very impulsive blow off top look by early February. So now that we had this higher low pullback and we're now trying to push to another higher high, regaining that bull trend with all of these moving averages stacked to the bull side and creating separation is only going to give more strength and more momentum to the SPY daily trend. So once SPY starts breaking above 411, assuming that it does, that is going to be the next higher high breakout on this daily chart, which means we will likely see SPY start pushing higher towards 420 and 430. I talked about why those levels are relevant on the weekend analysis of the weekly charts, so if you have not watched that video, you do want to make sure you do that, because there's a lot of information you're leaving out if you don't understand why we're likely going higher. But as always, anything is possible in the market, so if you're long on the market, you need to manage your risk right here at SPY 407. Below 407, we can revisit the breakout of the daily high at 404, and then below that, we have some gaps to fill below 402, and possibly even down at 396. However, if you look at all of the support above the gap at 396, it is very unlikely we are filling that gap anytime soon, and remember, there is no time frame on when gaps have to get filled. We just know that they usually typically do get filled. On the Nasdaq 100 triple Qs, we were down 0.06% today, and just like SPY, we bounced off of the lows right around the retest of the low on Thursday, which was right around 313, and we did bounce to close back over the positively sloping 5 EMA yet again. On the triple Qs, we have a lot of bullish momentum, and you can see it in the moving averages with a very strong bull trend. And really, we were just getting a pullback because we were getting a little too far overextended away from that 20 daily moving average. So now that we've cooled down, it's possible we push back higher towards the gap fill at 322 and our double bottom price target at 327. Manage your risk in the triple Qs right here at the daily high breakout between 311 and 312, because below that we could go fill the gap at 308. On the Dow Jones, we were up 0.32% today with a very bullish candle, closing at the high of the day with no wick above, and we do have a tail below the candle, which tells us we were getting buyers of the dip. We also saw an increase in volume in the Dow Jones today, which is a bullish sign that more and more buyers are stepping in as we're getting this breakout above the previous daily high just below 335. So Dow Jones above 335 means we could push back into the 340s. Manage your risk right here at the breakout right around 334, and if we break that, we do have a gap to fill down here at 329. On the Russell 2000 IWM ETF, we were up 1.07% today with a very bullish engulfing candle that engulfed the last 2 days of price action, and we did get price action back above the majority of our moving averages. We still need to break the resistance just below 177 in the previous daily high above 178, and then we're off to the races to close the gap and test critical resistance right around 181.4. To the downside, if we break down below support at 174, look for the gap fill at 172 and critical support at 170. On the ARKK ETF, we were down 0.1% today, and we are bouncing off of that support zone right around 37, but we're right at this resistance level right around 38.5, and we are still in a bear trend while we're trading down below 39. We do have this triple top rejection that's going to confirm if we get a close below 37 and then a close below 36. So you're getting a lot more bearish if we break down below those support levels. I would wait to get bullish until we can clear the triple top look of resistance at 40.5. On the VIX, we were up 3.1% today, and the VIX got rejected from 20 yet again. So this is more and more likely that we are going to see the VIX continue to get crushed down towards 18 and get the bull breakout. Remember, the VIX crushing at 20 tells us fear is leaving the market, and that is more indicative of a bull trend. On Bitcoin, we're currently up about 3%, and Bitcoin did get that bull breakout above 28,000, and we had this very tight Bollinger Band squeeze right below resistance, and we are seeing an increase in volume on the breakout. However, don't get too excited because we're already at the price target, which is right around 29,400, and if we break that, then we can get a lot more bullish for the trip up here just below 32,000. This is a bull breakout as long as we're above 28,000. So if you're long on Bitcoin, manage your risk right there at the breakout level. And if we get rejected from resistance, you need to see a break of support before you try to go short. On Google stock, we were down 1.83% after that monstrous bullish day on Thursday, and all we really did was pull back to the breakout zone about 105.6, and we did find buyers at that level yet again, and we are still in a bull trend with the price action above all the moving averages. I still think it's very likely that we're going to push to 110 and then possibly even as high as 115, so you can stay bullish in Google as long as we're above the breakout at 106. On Amazon stock, we were up 0.11% after a very bullish intraday bounce off of the rising 20 daily moving average of support, and we're right back to some critical resistance at 102. We need to break 102 and 104, and then I see blue skies until we get up to the 200 daily moving average right around 108 and the gap fill just below 109. So stay bullish as long as we're above this rising 20 daily moving average and manage your risk from that support zone. On Microsoft stock, we were down 0.76% today with a very buy the dip candle with a nothing but a wick below the body, and we are still above all the moving averages with the price action in this very strong bull trend, so we need to break above 290 to push higher towards the gap fill at 296. Any rejection from 290 on high volume could take us down to fill the gap at 281 on a breakdown below support below 283. On Nvidia stock, we were up 2% on the day, and this stock just continues to roast the bears that are trying to call a top, and we had another bounce from support at 267 yet again with today's bullish price action. The low was only about 30 cents below this support. We bounced and closed the gap at 273 and broke the resistance at 274, which means we're likely going higher to 280 and then 282.5. Remember, if you want to short this stock, you need to wait until it shows weakness, and right now this is a very strong bull trend. On Tesla stock, we were down 0.3% today, and these Bollinger Bands are getting very squeezed as we start to consolidate sideways between this resistance zone right around 208 and this support zone right around 173. You can see intraday we were breaking down below critical support at 183, but the buyers did step in and we did close above that support yet again. So 183 remains a critical daily support zone, but if we break that, then you're looking for 173 to 167. And keep in mind, I think this is risk off below 187 of filling the gap at 146. So if you're still bullish on Tesla, you're playing with fire if you don't manage your risk right here at these support zones, because if we do break down, this Bollinger Band squeeze means we're going to see very impulsive selling on high volume down to fill the gap. To get more bullish, wait for a break above this 20 daily moving average or a break above 197. On Apple stock, we were down 1.6% today, and Apple did fill the gap down here at 161, so we can delete the gap, and we did see buyers just above the rising 20 daily moving average. So Apple is still putting in higher highs and higher lows as long as it's above our support trend line of support right around 158. So you can buy the dip all the way down to the gap fill at 158.5, knowing you have very well-defined risk. If we lose that support, we could come back down to the neckline of the breakout of the inverse head and shoulders at 156. The next bull breakout will be above 165, and then above 165 will likely start running up towards 169 and the gap fill at 171. On the financials, we were up 0.22% today, still holding above that support right around 32. And above this level, we could start pushing higher towards 33. But if we break that support, look for the gap fill at 31.5. On the industrials, we were up 0.91% today on a very bullish candle, but we need to be cautious of a lower high before the next lower low as long as we have this gap to fill at 97. The healthcare sector was down 0.07% today, but still looking bullish above all the moving averages, and we do have strong resistance right here at 134. Manage your risk at the support at 130 if you're bullish, or wait for the breakout of resistance. On the energy sector, we were up 0.8% today as we continued to build the bull trend of closing above all the moving averages, and you can stay bullish as long as we're above this gap fill zone of support at 83. So jumping back over to the S&P 500, we have a lot of bullish momentum this week, and we have a lot of catalysts with the economic data of CPI and PPI. Keep in mind, the price action is doing all of the talking. Those reports are simply just going to be catalysts to continue doing what the chart already wants to do. Get in the habit of being objective and following what the chart tells us, and right now the chart is still telling us to expect higher prices. Also, be very careful if you're getting bearish on low volume climbing, because that is called a low volume melt up, and it is very common to see the market go higher on low volume in the absence of sellers. If we don't see the sellers and we get low volume buying, the stock market is going to continue to melt up, which is that very slow price action melt up higher, which is going to absolutely obliterate any short sellers. So be very cautious if you're shorting the market just because you're feeling bearish. Wait for the price action to confirm we're breaking support. You want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. You'll find out how to join the Discord server by clicking on the link below. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You'll find out how to join Bank by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.